Okay, no, thanks.
Okay, let's get started with the purpose that we're here this evening for. I want to thank all of the panelists and all of our guests who are online. I'm Vice Mayor Michael Robinson, and I'll be your moderator for tonight's discussion about flood insurance and the importance of having it, what you may have not considered and what you should consider in moving us forward. So with that, Sherry, I'll ask you to explain how raising your hands works, and for others that want to participate and ask questions or so forth.
Sure, absolutely. And I guess I'll have to ask you if people can raise their hands at any time, or if you will set aside separate time, to let people know that it's time to speak.
I think we will, if the panel members don't mind, we'll allow them to raise their hand as the panelists are speaking, so they can answer a question, assuming they're going to ask a question about that particular message that's being delivered. If it's a general question, we can hold those to the end.
Sure, absolutely. So as the panelist is presenting, I'll if you would like to speak, ask a question, you'll see a small hand icon on your screen that says raise hand. You'll just push that. I will unmute your line. You'll need to unmute yourself. I'll call upon you and you can ask your question, and you'll be allowed to speak. And then it looks like we do have one person on the line via phone. So you'll just do a *6 to unmute your line, and then just you'll be unmuted automatically at that time. Just wait until you have an opportunity to speak, till you see a pause, and you can go ahead and ask your question at that time.
Thank you, Sherry. So again, I'm Vice Mayor Michael Robinson. I'll moderate tonight's discussion. We've got a great panel tonight that includes Kim Haar from Haar and Associates Insurance. She brought along Ashley Tharp, also from the insurance industry, that will be extremely helpful to us. Neil Mazie, who is our Redington Shores and Safe Built building official. We have Commissioner Jenny Blackburn, who's really not wearing her commissioner hat this evening. She's wearing her realtor hat, and she'll have some great information for us as well. Also on the panel, but will be here if we run into trouble and we have any questions that the panelists can't answer, or some additional detail, is Lisa Foster. Lisa is Pinellas County's floodplain manager. She's a Redington Shores resident and also the chair of our planning and zoning board. I believe Mayor Beth Henderson is on the line as well. So Mayor, welcome, and thank you for joining us. Let me begin by saying that FEMA reports that in 2020, we tied both 1894 and 1985 for the most named storms making landfall in a single year. Colorado State University, which has issued forecasts for hurricanes for the past 38 years, predicts that this year has a 65% chance of an above average hurricane season. But we all know that it doesn't take a hurricane to cause flooding in our town. Just a few months ago, Tropical Storm Eta brought flooding to Redington Shores and neighboring municipalities on our barrier island, all the way from St. Pete Beach to Clearwater. It brought erosion to our beaches and floodwaters to over 200 homes in Redington Shores, as well as businesses along Gulf Boulevard. The town of Redington Shores is an active participant in FEMA's National Flood Insurance Program. Through our educational outreach, such as this workshop, activities in our building department to help folks understand how to build smart and to protect their homes, and other activities, we're able to ensure that residents can get a reduction on their flood insurance up to I believe that's 15% at the present time. But that doesn't work if people don't understand the importance of flood insurance and don't obtain it. So with that, I'm going to turn it over to Kim Haar to talk more about the importance of flood insurance, what you need to know about it, and how you need to best protect your property. Kim?
Thank you, Michael. And thanks for everyone who's participating tonight on our workshop. It was a challenging year for a lot of people. I have been in this community for almost 20 years now, and for myself, this was the most challenging, and for a lot of our customers and residents. And what we kind of want to do tonight is to talk a little bit about what we saw with this last storm, what kind of damage we saw, what challenges we ran across with regards to our flood policies, whether or not people had flood insurance or didn't have flood insurance, and what challenges they might have had even if they did. And more importantly, when I end tonight, I just want to make sure that going forward, we kind of know, okay, what did we learn and what do we need to make sure the next time around we're prepared for? And I kind of came up with a couple of screens, and you'll have to bear with me. They're very basic tonight, but it kind of really goes back to what did we need to do in the event of a flood, and what did we need to do? And we found out that pictures, and more pictures, pictures of the damage, videos, inside the home, outside the home. I am screen sharing, correct, Cindy? Am I screen sharing?
No, we can't see your screen.
Okay, hold
You
on.
should be able to, though. I made you a co-host if you click.
I did, but let me make sure that. Okay, let's see here. Let's make sure that I'm sharing.
There we go.
There we go. Okay, so what did we really find out? And that was, I say, pictures, and more pictures, including closets, drawers, and when you thought that you'd taken enough pictures, come to find out that even that wasn't enough. Photos of serial numbers on large appliances. And this is really a lot of the issues that we're talking about are interior, exterior, from everything. And a lot of the properties that I visited myself that had damage, it seems like that's a very daunting task because of how much damage some of these properties had. So the one thing that I definitely want to make sure that people leave here tonight with an understanding is if you have any type of damage like this in the future, which we've all said it hasn't happened to us in over 30 years. Well, it did this time. And so we want to be prepared for next time. And that included, like I said, photos of serial numbers on large appliances. Whenever you're in there taking those pictures, even something as simple as the serial number might not be something that's on your mind, but needs to be. We were talking about receipts for a lot of folks. That had damage with regards to, I'm going to go back here for just a second. I'm trying to. How do I go off of my screen share mode? Am I off the screen share? guys.
Okay.
Can anybody hear me?
Yeah, I can hear you. So where you click the share screen, there'll be a little arrow there.
Mm-hmm.
If you click
Well,
that, you should be able
now I
to.
have managed, wait a minute, because now I have managed to really take my whole screen down.
It's still up there. We can see it.
Yeah, we can still see the slideshow.
Can you see me?
Yeah. Mhm.
You can see me and you can see the
Yep.
slide?
Yep.
Right, I just can't see the slide. Okay, there we go. Okay, so, all right, is that better?
It's the same. It's good. We're good.
Okay, all right. Okay, so and when we're getting back to some of the things we learned about the damage, and a lot of this is talking about especially your contents that you had. The houses that I went into had a lot of damage with regards to carpet, furniture, wall coverings, all this different types of appliances, cabinets, so forth. And it really, I look at it in a sense, it's very frustrating because when you went back into the property or when you were allowed to be in your property and all this water was there and then it had receded and you're trying to figure out what to do, what to clean up and so forth. And right when you start, that's when what to do in the event of the flood is important, because you start cleaning out, you start throwing things away. So making sure that you're keeping samples of carpet or keeping samples of your upholstery from your furniture, cushions, things of that nature. You don't really think about doing something like that. But once it's gone, you no longer have any of that to be able to show the adjuster as to what kind of quality you had. It's like even something as simple as like your door frame. So we all know there's different kinds of door frames that you might have, baseboards, all of these things that we just get out of the house and throw away, and now all of a sudden we don't have documentation. And even though we might have a picture of it, we really still don't have that item to be able to show the adjuster what that quality of the product was. And I really think that that's one of the things that we learned this time around, is not to just start throwing everything away before we've properly documented what we had. And because once you have the water, one of the important things is to start initiating the repair, right? Having their restoration companies come in, they start drying things out, they start throwing things away, and before you know it, it's kind of upon you. So one of the things that I also want to make sure that I talk to people about is making sure you read your contracts. Don't just start signing with restoration companies, because we found after Ada that some of them were really having folks sign more about things that they didn't realize they were signing for. Jeannie, she has a question.
Yeah, I just what kind of clauses, tricky clauses did they have in those?
So, for example, we had one resident, and I don't know if she's on the line tonight, but I know we had one resident where they ended up putting in her contract that they were basically going to take away her contents and they were going to store them in an off-site facility. And they had that in the contract, but that's not something that's covered by flood. In another contract I saw, they basically were talking about how the insurance company was to pay them directly, and basically taking the customer out of it. And we don't want that either. So, you know, it's basically you want them to be able to come in and uh, do the restoration, start drying things out, but you know, you just do have to still be careful about and reading the contract that they put in front of you to sign. You know, and then basically, for example, there are certain things that aren't covered that I'm going to go over in a second. Um, but the other important thing too is to start, you know, do remember that mold is not covered under the flood policy. So you do want to start getting the wet items out of the house, you know, getting them out of the house. It's just along the way, making sure that you're keeping this documentation to help you, because once it's gone, it's going to be gone. Okay. So let's talk about a few of the things that we realized that aren't covered. And when I say we realized, that a lot of the residents along the way just kind of found this out through asking the questions. Loss of use. Okay. Temporary housing is not covered by the NFIP. That was something that really became an issue for folks that were displaced. I know that the county did a lot of work. Lisa did a lot of work trying to, you know, get the county declared a disaster for people to be able to have that type of assistance. But your actual NFIP policy is not going to cover that. If it didn't get wet, they didn't pay for it. So although something might have been damaged, you had to prove that it was wet in order for it to be covered. Putting things in a pod out in your driveway, the cost of the pod for storage isn't covered. If you didn't have a photo of the damage, kind of getting back to what I was saying before, it wasn't included. For example, when they come in and they take out your drywall, if you had insulation, you needed to take a picture of the insulation behind the wall. So, you know, outdoor items, pool pumps, docks, sidewalks, decks, driveways. These were things that aren't covered. They're not part of the actual structure or building. So they weren't covered. And basically, you know, there was just a lot of items I think that people didn't realize there wasn't going to be any coverage for. The www.fema.gov has an actual claims manual. And in that claims manual, it's like 164 pages long, but I'm going to try and hope I don't mess things up here with switching over to a different document. All right, does everybody see that? So in that document, there is a list under the general property form of, you know, what's covered, what's not covered. And it's very detailed. So I encourage people, if they had any questions about any items that weren't covered as part of their claim, to just view that document, because it will probably explain why the adjuster said what they, you know, said what they said. And that had a lot to do with it too. But I think that the documentation piece was huge and very labor intensive. And I know in a lot of these workshops before, we've even said to prep before a storm comes, make an inventory of your property, either with a camera going around each room. But what we did find out is that becomes very critical at the time of the claim, because you literally have to write out the item. You have to write out the value of the item and every single item. And then you really have to be able to prove that you had the item. So I've talked to several policyholders that was like, it was unbelievable having to come up with this list. So the more prep work that we do before storm season comes again, I think, you know, we're all going to keep our fingers crossed that, you know, we don't have this happen for another 30 years, but it could happen next year. And we just want to be prepared for it. And then there was a couple of other.
Kim, before you move on, talk to us a little bit, if you will, about flood insurance and a person's homeowner's insurance with regard to contents or other sorts of things that might be there? Because when I lost my home in Katrina, I know that some things were covered one way, some were covered another.
Okay, so you're talking about the fact that, like, for example, if it's a hurricane with it and there's wind damage, the contents are covered as replacement costs, or can be, depending on what coverage you have on the policy. Under flood insurance, it's going to be actual cash value for contents. Is that what you're referring to?
No, as I recall, it wasn't wind damage that caused the problem with Katrina. It was flooding because the levees broke, and that caused the flooding. But as I recall, let me see. I'm probably misspeaking here, but some of the items that you're talking about with regard to, storage of items or renting another place to live during the time period, is that covered by flood insurance, or does that end up under some homeowner's policy?
Well, it's not. So when you move the property out of the house into a storage facility, okay, for after flood damage, it's not going to be. It's not going to be. Are you talking about the cost? The cost of that item is not going to be covered.
Gotcha.
While it's away for flood, and even for the homeowners. I mean, the homeowner policy for wind provides loss of use and some extra expense and some things like that. For the flood policy, it's what's in your home is flooded, it's wet, that's what they're going to pay for. So, and even like once you move it to a pod, and that's what I'm saying, because a lot of people ended up getting pods after Ada to put their items in their driveway. The cost of that is not covered under the NFIP policy.
Thank you.
So it's basically, and it kind of gets back to, if it's either wet and it's paid for, or it's not paid for, as far as the NFIP goes. Okay, which is what we're speaking to tonight. So I think that there is a difference, and that's one of the things that in this particular case, we were just talking, for the most part, we were just talking flood. We weren't talking about a lot of wind damage. Now, there were a few homes that had a lot of wind-driven rain. We had a lot of wind-driven rain with this particular storm as well. And that presents its own challenges, because most homeowner policies these days have wording in them that indicate that there must be direct physical damage visible to the exterior of the property. So I know we did have some residents that had that kind of damage as well. So did that answer your question or no? Ashley, do you have anything to say on that?
Yes, you answered my question, and I thought back about it a little bit more, because flood insurance covered contents and damage to the home, everything that was wet. My homeowner's insurance covered the fence that was blown over.
Yes. Well, and that goes back to what I said a while ago, the sidewalks, pool pumps, decks, fences, driveways, anything on the exterior of the property is not covered under the NFIP policy for damage, whether it be under for personal property, for the structure. Seawalls, docks, those things aren't covered.
Thank you, Kim. It's really accurate, and especially the part about if it did not get wet or if it was not damaged to flood. So a lot of the EDA claims, there was substantial damage that occurred, and there is a requirement potentially to elevate, but it was not total damage, meaning the building is still there, there's still a roof. I apologize, it's my pups. So the portions of the building that still remain that are undamaged are not going to be part of the flood claim. So it is strictly flood damage, result of flood. That is what is covered in the flood policy.
Thank you, Ashley. Thank you, Ashley. And that is definitely one of the another one of the issues that we dealt with. The house that I was in, they came in and they took out the drywall 2 feet up and started, just kind of ripping and throwing things out. And you really have to try to determine at that point, what's been damaged by water, what's wet, and what isn't wet. So I'm hoping that tonight, just kind of giving everyone a little bit of a history about kind of what we saw, because this is the first one that we've really had to be able to see how it's really going to, how the policy is going to respond and to what extent and to what we need to learn from it going forward to be able to make the process a little bit. It's never going to be an easy process. It really isn't. But being prepared and knowing what to do, I think, can at least kind of ease that pain next time around, because we all know when it happens to us, we're kind of like, you're kind of in that moment of just, what do I do? What do I do? What do I do? So what we're trying to do is to get people to know what to do. One of the things going forward before we enter this next storm season, and we can come back to any questions, but I just want to make sure that folks understand, making sure that you review your flood declaration page now for your flood insurance and understanding what's there, understanding your coverage, understanding the building is different than the contents. There are 2 different limits and there are 2 different deductibles. And just making sure that your values are what they need to be. Make sure that it's a primary. If it's your primary home, it's listed as your primary home. And if it's a rental, it needs to be listed as a rental or a secondary. You only get to insure one primary home with the NFIP. So, and it makes a difference on the coverage. So that's why it's important to make sure if it's your primary home, it's listed as your primary home. Where the flood, being aware of your flood risk, what's the zone, as far as the adjusting of the claim, this doesn't make a difference on that. What I'm just trying to make sure is just make sure that you know what your flood risk is, because if you're in a V zone or an A zone, in this particular case, the beach properties didn't get the water. It was the intercoastal side that did get the water. And with the intercoastal side, we all know that a lot of those properties, a lot of our land is low in that area. And that's why you just want to make sure that you understand what that is. Make sure your lender information is accurate. And why is that? Because they're going to end up on the check. Depending on the amount that the check for the dwelling itself, the lender's going to be on there. So you want to make sure that your lender information is accurate. Otherwise, that will delay the processing of your claim payment or you being able to get access to the money. And then make sure you know the company and your agent information for being able to call in a claim. I mean, we were calling in claims as early as 6, 7 o'clock the next morning from people that had flooded. So just make sure you know who to contact, because that's something that you don't want to have to be trying to find a document for when it's after the fact. And if all else fails, I mean, that FEMA.gov site, they have, like I said, they have that excellent claims manual that really lists out a lot of information. I've spent the last 2 days just searching around on there, and it's amazing the information is there. But call your agent and ask them any questions that you have with regarding to flood. I've answered a lot in the last 6 months, and I'm happy to do so at any time, whether you're my customer or not. Please feel free to call me. I'm on the Pinellas County Advocate site, and I'm always glad to answer any questions from any resident at all. Any questions? All right, well, with that, I am going to turn it over to Neil to talk a little bit about some of the building code issues.
Let me stop there a minute, Kim, because I do have a couple of questions.
Okay.
One is, so I know we had a lot of flooding here and up and down the coast, as I said. And I know that one of the issues that we had with Katrina when I was there was how rapidly adjusters were able to get out and how many were available to get out to deal with homeowners. And a particular problem then that arises, or I was thinking about, is this whole notion of your comments about the importance of keeping good records and keeping property that adjusters can see, because sometimes this can go on for quite some time. So I'm curious about your comments about that, but I'm also curious if we have some people that are listening to this discussion whose home was damaged during ETA and can talk about their own experience. If there's anyone like that that would like to share, please raise your hand, and Sherry will call on you.
Can I just ask real quick? I remember a nightmare about this with I have a vague recollection of a story about the check from the insurance company being made out to the homeowner and the lender, and some ensuing fluke sort of nightmare scenario with that.
Well,
Or
go ahead.
It was made out to the lender and the contractor.
Well, so let's go back to where I said about being very careful about what you sign.
Mm-hmm.
A lot of times, contractors, these restoration companies, after an event of such, will ask you to sign an assignment of benefits form. And on an assignment of benefits, they basically say to you, oh, don't worry, I'll take care of it for you. I'll deal with your insurance company directly. You don't have to worry about it. Just sign here. Well, no, sometimes they don't really say that. They just put the contract in front of you. Then they say, I'll handle it. They have you sign, and you don't even really realize you're signing an assignment of benefits. But what happens is that takes you, the consumer, the insured, the policyholder, out of the mix. And it allows the contractor then to deal directly with the insurance company. And sometimes it depends on the policy word, or it depends on the contract wording. So sometimes that will direct payment from the insurance company to the contractor directly. Mm. And we don't want that to happen. I saw one of those, and we made them take that wording out. We're like, no, you're not dealing with the insurance company. We'll deal with the insurance company. You take that wording out. Right. But what happens in those scenarios, the check is then issued to the contractor and to the lender, and the two of them have complete control of the money. And complete control. And that's one of the reasons why you also want to make sure that your lender's right. We had a scenario where, the lender wasn't right. And then then you have to go back to the carrier and prove that there's a different lender. It just delays the process.
So if there was like a refinancing, or if the loan was sold, that's why you have to check.
Correct. Right,
all right. Sherry, do we have any hands raised?
I have no hands raised at this time.
Okay, so we will move on to Neil, but the things that you raised there about contractors and lenders is important. These events are loaded with nefarious people who would steal your money, or who would promise to do work and who don't. Even without a hurricane or a storm or flood damage, anytime you deal with a construction contractor, you need to know who you're dealing with. You need to be careful that you're not paying for work that isn't being done, and that you're protected that way. So Neil, talk to us a bit, if you will, about the experience we've had with EDIT in particular, and then also about some of our codes and why they're in place and the importance of people building smart. I know one of the things that we did do for folks who suffered damage because of EDA was we suspended and didn't charge fees for permits, correct?
Correct. And we also did not we actually reduced in our floodplain ordinance requirements, we reduced the cumulative total that we have been doing for years from 5 years to 1, which is much more realistic, especially given the fact that Pumpkin Key is the lowest area, and believe me, my company worked in North Redington Beach, Redington Shores, and luckily you guys are the highest area exclusive of Pumpkin Key. They got hit the worst, and at the end of the day, they needed to they did what they could, but we are trying to make it more feasible for them to rebuild their places after a year of cumulative, which is what Pinellas County and Lisa Foster have also said they were going to adopt, which is a 1-year cumulative as opposed to the extended 5-year cumulative that we had currently in place. This is a perfect example. Last year's storm was a perfect example of that threshold being, too much put in place to the point where people with older homes from the 60s and 70s, they were really close to not being able to rebuild what they had. And that's not what we want. We want people to build resilient structures. We want them to be able to, in a 1-year period, cumulative time frame, place and solidify their structures, fortify their structures with windows, doors, roof, mitigation strategies to do this, and everything else that goes along with that. If they want, and that's just within the existing structure. If they like to do something on a new structure or an addition, that all comes into play as well. And we have to look at current property appraisals, whether they be FEMA appraisals, 50% appraisals, or not. And we have a higher regulatory standard of 49%. That also comes into play. We're just trying to make sure that people have the ability to build back to what they had, number one, to make any improvements that they need to for drainage or anything to fortify their structure and keep it under 50% valuation, 49% valuation, I should say, because that's one of our higher regulatory standards. And at the end of the day, most people can. And with Kim mentioning all of the information about pictures, the pictures, they tell 1,000 words. And the last thing we want is for people to have to out of their homes or forced out of their homes for something as minor as 3 or 4 inches of water in their house, where first thing we want them to do, it does not require a permit, is to basically cut the drywall up to whatever level it is that was damaged, get the mold out of the house, dry the house out, fix the drywall. As long as you are not increasing the area of the house, or you're not renovating the house to the point where you need a permit, building permit, your insurance company's most likely, and Kim, I'd like you to chime in on this. Your insurance company, if the building department doesn't require a permit and to repair what was there, to bring it back to where it was, and there was no alteration to the building, mechanical, electrical, plumbing system of the house, then they should be able to get somebody in there and just licensed and insured with the PCCLB. They can walk in the door, application, and a printout of the property appraiser's computer, printout of their house. Just tell us what they're doing in each room. And we actually, I think it was till January 31st, we suspended all permit fees whatsoever. But if the people came in and wanted to get a permit, let them know it was a free of charge permit, and they would be able to come right in, right out, and get their permit to do this type of work. Want to make sure that they keep their places, but we don't want them to go to unnecessary engineering or permitting fees.
So one of the things I heard you mention, and it's kind of a recurring theme tonight, about documentation and pictures of the damage, pictures of your home ahead of and after the storm or after the damage is just as important to you as the building official in making a determination and supporting what a homeowner wants to do when it comes to rebuilding, correct?
Correct. In other words, if they come in and they give me pictures and it shows me a nice, clean, neat house that's been saw cut, 12 inches above grade inside of the house, and I understand their cabinets, their kitchen cabinets, their bathroom cabinets, everything else has been damaged. Those are things that, I'm sorry, but I don't think that they should be included necessarily in the 50% calculation or the 49% calculation. But those things normally we do not require a permit for unless it's in a multifamily building where they would need an asbestos report, and they would have to justify that anything that they were taking out did not contain asbestos-contained materials that would need to be disposed of at a proper site. But for houses, regular houses, no, I would rather have the people get back into their houses and get whole as soon as they possibly can, because the longer you let those houses go without being repaired, then more problems you're gonna have.
And
So I know it is sometimes frustrating for residents or homeowners when it comes to this 49% or 50% rule that FEMA has, and there is a balance between what FEMA is trying to accomplish here and what NFIP is trying to accomplish, which is to make us all more resilient from flood and for less damage to occur. That's why new structures have to be built higher to a certain level, and that's changing and increasing because of sea level rise and everything else. So it's important that people understand that, and it's a balance between putting money back into a home that is prone to flooding and prone to damage versus taking some other steps. What the town is doing now with this 1 year ruling is that it will allow people to make improvements to their home based on 1 year versus 5 years, which hopefully those in some of those low-lying homes can make improvements to their home without as they want without causing some other difficulties.
Agreed, and that's ultimately, we want to build more resistant structures at the end of the day, and by and large, each jurisdiction is different, and I think that it was wise to go from a 5-year to a 1 year cumulative. 1 year cumulative is what most jurisdictions are going to, simply because they want to not give the illusion of phasing projects, and the people, if you do not have that 1 year cumulative in your ordinance, then people can walk right in, do on a $300,000 house, let's say, $140,000 improvement, then turn right around, get their CO on the addition or the improvement, and within the next month or next week, come in with a new appraisal, and they can do another $150,000 addition. And that's
So-
what FEMA calls phasing. They discourage it. The insurance industry discourages it, and everybody, their brother does. But in reality, in the situation we have with Shores, we had a bunch of people that were very, very close to their 50% with just the storm that we had this last year. It was not even a major hurricane, it was just a tropical storm. And we're working with all these folks, trying to make them whole and stay under the threshold of that 50%, or 49%, I should say, because that's one of our higher regulatory standards here.
So one of the other points I'll make here is that for everyone that's listening, I know that some homeowners would say, "Hey, just let me do it. It's my money. I want to I want to do this to my home. Let me do that." Well, the problem is with that is that we're held accountable by FEMA for applying the appropriate rules to help make the community more resilient. And so, any of those violations can put the entire town at jeopardy when it comes to NFIP, when it comes to keeping our rates low. So that's the reason that we hope everyone complies with the ordinances, with the building codes, and we all then build a more resilient community.
Absolutely.
Do we have any questions from the audience for Neil and the building department, Sherry?
Well, right now I don't have any hands raised. However, I did receive a call. Oh, I'm sorry, with the exception of Jenny. Jenny, I don't know if you mind if I go first. I did get a call right before I left the office today. Someone who was interested in being on the call, and I'm going to be sending them the recording. They were hoping that we could talk somebody. Neil, if you could start, and then I don't know, maybe Lisa Foster can jump in. And I get a lot of calls from people who are interested in raising some potentially demo and raising. I don't know if you can talk a little bit about the process. Where do these people go? Where do they find information? I think that would be useful, especially for the one individual that I spoke with today, anyway.
Sure, I can take that question. Can you hear me?
Yes,
Yes.
thanks, Lisa.
Okay, so there are flood mitigation assistant grants out there through FEMA. The town would have to write the application on behalf of the resident. I'm not sure if the town has the bandwidth or has that set up to manage these grants at this time. So that would be a question you'd have to discuss with the town. Generally, how they work for an elevation project, there are two different ways. They call it mitigation reconstruction is the demo rebuild that you're talking about, Sherry. And from what I understand, there's a cap at $150,000 towards that project. And there are a lot of parameters that you need to stay within. For example, the square footage has to be within the original square footage. I think it's like within 110% or something like that. So there are a lot of really specific things that you have to comply with. So it's going to be really important that you do all that research and understand what you're getting into before you decide to move forward with that grant. They usually take a really long time as well. There are funds available under the grant for alternate accommodations, from what I understand, and this is not my area of expertise, but that is part of it. I spoke with the city of St. Petersburg has done several of these elevation projects, and he explained that for an elevation, lift the house off the ground project, there's a lot less money available for your alternate accommodations, presumably because they would think it would take less time to do that type of project. But the actual raising of the structure project itself doesn't have that 150 cap for the construction component that the mitigation reconstruction does.
I have a question, Lisa. Can you take this? It's from Veronica. Veronica, I'm going to unmute your line.
Looks like she's still muted.
There we go. Can you hear me okay? Thanks, Lisa. Are there also grants available to lift your house and put it on skates and move it to a different lot if you wanted to? One that perhaps is, you know, not in good use, maybe elevated and then build on your prior property, but the grant being for relocating your house.
So there are grants for relocation, yes. You would want to go on that FEMA website. We really need a grant specialist here to talk about this, because that's a whole entire different animal. But the main one is the FMA, the Flood Mitigation Assistance Grant through FEMA. And they do elevation, they do relocation. There are different things that are approvable underneath those grants. So the short answer is yes. Details I don't have.
Okay, thank you.
Okay,
I do have another question from Doug. Doug, I'm going to go ahead and unmute your line.
Yeah, my question is on the, you talked about the cumulative total from 5 years to 1 year. That's based on the town's rules. How does that play? Does FEMA play along with what you mandate, or what if does FEMA mandate the 5 year, 1 year thing?
That's actually part of our revised higher regulatory standards through the local town floodplain ordinance, and we just revised that. We're waiting for final approval, if I'm not mistaken, but it went from a 5 year cumulative to a 1 year cumulative, which will help residents get back to being whole, or being back to where they were on a 1 year basis, as opposed to the 5 year cumulative that we had before. And Lisa, correct me if I'm wrong.
No, do you want me to elaborate?
Yes.
Please.
Okay, so the premise of the FEMA requirement, the 50% rule as it's referred to, is to protect people and property. So if he's got a structure that's down on the ground, it's at high risk for flooding. They want you to get it up so that there aren't repetitive flood claims on it. And the 50% rule is in place to make sure that does happen. Because there is something called phasing, and that's basically people trying to loophole out of this 50% rule. They do a project, they close it out, they come in with a new appraisal, do another project, close it out, come in, do another appraisal. So to stop that, most communities will implement what's called a cumulative substantial improvement, meaning over X amount of time, you can only do that 50% value of the house the day that first permit was pulled. You can't keep bringing in a new appraisal and keep loopholing through this 50% rule. So most communities implement substantial improvement. Now, some communities have a lifetime because they really just want people to redevelop and get up out of the floodplain. Then we have other communities that do 1 year, some that do 5, some that do 10. The longest one in Pinellas County, one municipality has a 15-year cumulative. A few have 5, most of them have a 1-year cumulative. And that 1-year cumulative, I guess it just shows good faith that the town is trying to enforce that 50% rule, so they don't get in trouble with FEMA. And they, you know, that 1 year is not going to stop it. Obviously, people are still going to come in and do a project, wait a year, and then do another project. So they're not really going to prevent it from happening, the phasing, but at least it shows good faith that they're trying to prevent phasing. I guess that's how I would explain it.
Yeah.
Yeah, I'd like to say that the commission thought long and hard, and we had a lot of discussion about this before we adjusted this down from the 5 years to 1. And it wasn't done without a lot of thought. We certainly hope that people don't try to game the system and phase as Lisa and Neil explained, that they come in, close out one permit and do the same thing next year. That sort of thing would get us in trouble with FEMA. So going back to what I said earlier about the importance of our homeowners doing what's right, following those rules and guidance that we do have in place, we're trying to do everything we can to make the town as resilient as it can be, and at the same time helping our residents who have to live here and want to improve their homes.
I also wanted to just clarify one thing that Neil mentioned before. He was talking about those repairs not being included in the 50%. That's actually not how the town handled it. The town did handle those improvements as if those repairs needed, that if the repairs required to bring the house back to the shape it was in were higher than 50% of the value of the structure prior to the flood, then that would have been a substantially damaged structure. I believe what Neil intended to say was those repairs weren't going to be included in the cumulative tally, because the intent there was obviously to prevent phasing. Well, if you're just making repairs from a storm, nobody's trying to do phasing. They're just trying to repair their house. So those repairs didn't count against that 5-year cumulative tally. So if somebody had just met their 50% and they were still within that 5 years, so they didn't have any allowance to do any improvements or repairs for another, say, year, that would have been waived. You would have been able to repair your house. You would not have been able to remodel your kitchen, remodel your bathroom, blow out the wall for the living room, do improvements, but you would have been able to do the repairs to get your house back to the state it was in before, as long as those repairs cumulatively did not meet that 50% threshold. Well, 49% for you guys.
Doug, I think he has his hand raised again. Doug, you're still unmuted. If you had a question, you can go ahead.
Yeah, I think I got it answered. I mean, that was my question. Okay, I'm calling on behalf of my mother-in-law. She was just under the 50% threshold, had all this work done. So now what if it happens 2 years from now? Well, you've already moved it from a 5-year to 2-year cumulative. So obviously she's not trying to phase, she's just trying to live.
Right, exactly. So if, like I said, so say she had just remodeled your house, that remodel cost her entire, we'll call it the 50% allowance, right? So now she's got to wait another 4 years or even 5 years. Say she just finished it. So she's got 4 years and 6 months. We get hit with a storm and she's got, you know, $20,000 worth of damage. She had a couple inches of water. She's got to do baseboards, walls, door jams, some drywalls, flooring, whatever. So she doesn't have a ton of damage. It's well under 50% of the value of the structure. She would be able to make those repairs based on that emergency declaration that the town made. So they made this declaration saying those repairs would be exempt. Now, when they went back in and updated their code, I believe they included that. We're dropping from 5 years cum to 1 year cumulative, but we're having an exemption in there. If another storm hits, then we're not going to count that repair cost as long as it's under the 50%, because that's the FEMA rule. As long as it's under 50%, we're not going to count it against your cumulative tally if you had already maxed out prior to.
Okay, thank you.
Correct. Any other questions, Sherry?
I don't see anything, no. No
And I
hands.
thought that Jenny Blackburn might have had a question, and at the same time, I'm going to turn the mic over to her to talk to us from a Realtor standpoint after you ask your question, of course.
Okay, so my question is, first of all, what about, at what point does, do you or does FEMA say, or does the insurance company say, this can't be fixed, it's a total loss, and you have to just tear it down and start over? Does that ever happen?
Neil, you want it or you want me to take it?
Well, I'll take it. It's honestly, Jenny, it's on a case by case basis, and it's gonna be, I mean, everything is different. Every real estate transaction is different. Every house is different. Every parcel of land is different. The improvements that are involved with that are different. And at the end of the day, depending upon local jurisdictions, floodplain ordinance and what regulations or higher regulatory standards they have, that's what's going to dictate at that point in time that they actually make application, and what flood maps and what ordinances are in effect at the time that they make application for that type of an improvement. Depending upon what it is, it really, it's a moving target, and you know, you never know what you're going to run into, and there's not really a cut and dried answer, Jenny. Is what I'm getting at.
Jenny, it was a really good question though. So an insurance company totaling it is a totally different scenario than a substantial damage determination. So an insurance company might find something not totaled that a building official does find totaled, which means substantially damaged. Basically, whatever the value of that building was prior to the storm damage, that
Right.
value, excluding lands, excluding any improvements, you know, fences, pools, none of that counts, just the building itself. Whatever the value of that building was in the condition that it was in prior to the storm, you divide that number in half. And that's how much, if the repairs are going to exceed that amount of money, then it's called substantially damaged. And that's the point at which it has to come down and be rebuilt to code. So if you take and a lot of appraisers, the real estate appraisals are very different than these substantial damage determination and substantial improvement appraisals. There are a lot of classes that we've got now that are coming to Pinellas County to try to train up the appraisers, but the best way to do it is the actual cash value. How much would it cost me to replicate what's here right now, to rebuild this structure as it is, depreciate it down for the wear and tear on it? You know, it's essentially effective age depreciation, and that's the value of that building. And it doesn't matter if it's here or in Wyoming, aside from the building material costs, really. I mean, it's irrelevant of where it is.
So that's an important thing though, is that it's not just, oh, okay, well, I'm going to get reimbursed what it will cost me to rebuild this. No. If your house was built in 1952, they'll take what it would cost to rebuild a, single story, 2-bedroom house, and they'll take it back to 1952 values. Like, what would it cost in 1952 to replace this? Am I correct?
So now you're back on the insurance side. So for the substantial damage determination, yes, the answer is whatever the value of the structure is, half of that is how much you can spend on repairs. If it's going to cost you more than that to repair it, then it's substantially damaged. It's got to come down. What the insurance company is going to pay you is completely different. Like Kim said earlier, if it got wet, it's covered. If it didn't get wet, it's not covered. There's a house, one of the residents down in Madeira Beach, and you may have seen it, they've been on the news. Their home was already damaged. It had termite damage prior to the flood. So after the flood, that building became substantially damaged, so it had to come down. But their insurance company wasn't going to pay them the costs to replace a new compliant structure. So now you have this kind of disconnect between the NFIP insurance and the NFIP building requirements, and you know, it's a problem. So those folks are going to need to come up with the money, you know, so that's why we worked so hard to get that SBA. So it's a low interest loan that they could have taken to help them rebuild their home.
Okay. So one other thing, what if your property has flood damage, and maybe this is an insurance question, and the insurance adjuster comes in and looks and they see illegal improvements, in other words, like a bathroom at ground level, or if they see unpermitted work, clearly unpermitted work, stuff not up to code or whatever, something jerry-rigged, does that then, would that invalidate someone's insurance policy?
I think Ashley should take that one.
Ashley, would you like to take this one?
Okay, so we do see certain things such as enclosures and things like that that should not be there in our risk rating. So when that occurs, the policy is adjusted as that in that way, and the adjuster will look at the policy to see if it was rated appropriately and send the notification over to the underwriting. But that is really it. There's really no notification to the community to say how the policy was rated or if there were things discovered after the rating. It may just affect the policy rating, and that's it.
And coverage. I mean, you know, correct me if I'm wrong, Ashley, but you know, let's say, for example, you have an elevated structure that's post-firm that has built out on the lower level. Mm-hmm. So what's going to happen is the adjuster is going to adjust the property as it should be adjusted based on that. And then what they do is they send the insurance company, and it's basically a risk alert, and that tells them that this is not rated correctly. So it does impact the coverage. And a couple of years ago, I did have a dwelling up on a river that this happened to, and nothing on the lower level was covered. Then it received mold, and then the property wasn't being able to be lived in, and none of that was covered by the NFIP. But then at the same time, these risk alerts are actually going to the carrier, and they're happening now because I am getting calls from residents saying, why did my premium change? Because after the claim, maybe they found out it wasn't owner occupied, you know, maybe some other things like that happen. So it happens on the insurance side. It doesn't make it to the town side.
I just want to clarify that a bit more. So let's say that there was always an enclosure. The policy was rated as an enclosure. There was an enclosure there. So there really was no change to the rating. And the adjuster goes out, they're going to handle whatever they have there as whatever the policy says to do. So it doesn't matter how the policy was rated. It doesn't matter if there were changes on the afterwards. All that matters is when the adjuster gets there, they're going to rate or they're going to adjust it based on how the policy says. So we've even seen situations where the policy was rated as elevated without any enclosure, and there is one. They apply coverage restrictions to the enclosed area and they move on. They just put that in the report and they send a notice. We've had situations where a customer was rated with a non-elevated, where they said there was no enclosure at all. We're just a non-elevated built right slab on the ground, and the adjuster gets out there, they see the foundation and they see that it's actually elevated on pilings or some kind of method, and they will report that and they do coverage restrictions. So Sometimes it ends up benefiting, the rate ends up being lower afterwards. That's because you never had the coverage in the first place. Other times it costs more because you got the coverage and you weren't supposed to. So all that happens is whatever the policy says for rating is what's going to happen to with the adjustment. And there's no like, I was rated this way, I've been paying this amount for this whole entire time. I've been paying to have my enclosure covered the whole time, so I've been paying non-elevated rates. Doesn't matter. You're in an elevated building. You should have had coverage restriction.
So that suggests that folks ought to really pay attention to their insurance coverage, make sure it's up to date, talk to their agent, make sure that what they have covers them for what they expect.
Exactly. I cannot tell you how many times I've had debates with agents where they want to rate a policy as non-elevated because they realize there's no coverage restrictions with a non-elevated rate.
Oh,
And I will go over and over. Nope, it's elevated. It's an elevated building. We still going to have to show that it's elevated. It's even though it's above the base flood, we still have to show that it's elevated. We still have to do the right thing for the customer because at the end of the day, when the adjuster comes out, they're going to see that, and that's an elevated building.
Amen.
Thank you. So, Jenny Blackburn, you're a realtor. You deal with this all the time. Property that is up for sale that either has or doesn't have flood insurance. Talk to me about what that means to you and the value of the home.
so there are some properties that where the owners, because the property's paid off, they self-insure for their flood insurance and other property owner insurance. So that's fine because the especially if it's not an elevated structure, the real value is in the land. Even if the structure gets washed away, the land still has a lot of value. The problem comes when you, if you want to sell that property and you don't have insurance on it, that means that you probably don't have a current elevation certificate. And an elevation certificate, I believe, that's done by an appraiser, I believe. They do the elevation certificate. And it used to be the way that flood insurance worked is, okay, Treasure Island, it's going to be this much because they said this is what the base flood elevation is for all of Treasure Island and all of Madeira Beach and all of Redington Shores. So you would be able to know in advance what your flood insurance premium was going to be. But they changed it to where it's based on what's how high is the ground, the lowest living level of your house from the base flood elevation. Yeah. So it's based on individual properties. So if you're self-insuring, you don't have a elevation certificate, that means that brings the value of your house down because so I recommend that people who don't have that they at least contact someone to get an elevation certificate for their house, even though they don't have insurance on it, because people who are purchasing, it has more value if they know what their costs are going to be. So they need to be able to shop for flood insurance. If you don't have an elevation certificate, they can't shop for flood insurance. They don't know what their premiums are going to be. And unless it's someone that's also going to pay cash and self-insure, well, that shrinks your market quite a bit. But even then, people want to know what their risk, what their cost, like how much is it going to cost to own this particular house? That's one thing.
So let me ask this question. So a home, which is an older home, one of these lower homes, pre-firm, let's say, can a buyer assume an insurance policy now, or is that a thing of the past? And I'll ask I'll ask Ashley or Kim to
Yeah.
answer that.
I love answering that question. Yes, please assume that flood policy. If you have one for sale, please, 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 if you're selling a home and you have a flood policy, please sell the flood policy with it. It is so important, not only now, but in the future. There are lots of changes coming to the flood program. I cannot stress to you how important it is to have a flood policy and to sell it with your property when you sell your property. There are so many things and so many details that go into that. And it is, I just can't stress it enough.
So that was,
yeah. Sorry,
So-
even if you have a USAA today, or not USAA, a USAA policy, sorry, it excites me so much, where you have to be a member to have the policy, those still can be transferred. You can write it with whoever you want, with whatever new agent that you want, and they will honor all of the grandfathering and all of the prior ratings. So it can be done. It may not be with USAA, but it can be done. So please, 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 it can be sold. An NFIP policy can be sold.
You know, and
go ahead, Kim.
no, and I was just going to say, I mean, even on pre-firm policies, I still recommend right now the elevation certificate, because we are really starting to see where the elevation certificates are matching or even being better than pre-firm rates.
Exactly.
So, I mean, yes, assume it, get the EC and do it all.
Right.
So that was the point that I was trying to get at. So even though you may have your home pay for it and you're quote self-insured, once you drop that NFIP insurance, once you drop that flood insurance, and it comes times to sell your house, and there's another home just like yours down the street, and they do have that flood insurance that the new buyer can assume, you're putting yourself at a disadvantage in the market, correct, Jenny?
Yeah, leaving money on the table.
We do have a question. We have Doug again. I'm going to go ahead and unmute you, Doug.
Oh, he's still muted. There we go.
I remember a few years ago dealing with this elevation certificate. Does that go on file anywhere with the city, or is that up to the individual to hold?
It can really be all of the above. It could be that there's one with the city. It could be that there's one with your prior agent. It could be one with the carrier that you had it with. I mean, you know, there are different places where it still could be.
Are the towns now starting to record these though? They
Yes,
are?
yes. Right, Lisa? Ashley, somebody?
So it's completely reliant on the surveyor to actually put it on file. And what we're finding at the insurance companies is that they're not always putting the one that's signed on file. And so, yeah, thank you, Lisa. You're going to show like where they are on file, which is great.
Okay, so the cities and the county for their jurisdictions will collect elevation certificates for building purposes. So if somebody comes in for a permit to remodel, somebody comes in for a new build, a demo, whatever it is. So elevation certificates are collected only for building purposes. They are not collected for insurance purposes by the city or the county. Okay. So all those elevation certificates that are being done specifically for insurance purposes, the city and the county would never see. Legislation passed back in, I believe it was 2016 though, that started requiring surveyors to upload all the elevation certificates that they do to the state. So the state implemented a collection application for surveyors to upload their elevation certificates. The county recently digitized all of those, plus all of the old elevation certificates countywide for the cities and the county. And they're all available on our map service. If you go to floodmaps.pinellascounty.org and you scroll down, you'll see a button for elevation certificates. If you click on that, there's some information about how you can get one, what's on it, what it's used for. If you click on the map, it'll take you over to the map and you can do a search for your address and you can download your elevation certificate. So this is all updated as as of about a year ago. And there's another separate application that all the municipalities are now using and the county is using. So as we receive elevation certificates, we're uploading them. But of course, we still have surveyors uploading the insurance, the ones that are done for insurance, to the state website. So on this application, you can actually turn the state ones on. The state ones are these colored little dots, and the ones the county has digitized are these little white circles. So if we scroll over, we see we have a lot of elevation certificates here in Redington Shores. This one would be one that was uploaded by a surveyor. This one would be one that was uploaded through our digitizing project. So this will continue to be updated. There's a little bit of a lag on it though, because it's going to take the building official time to go through, review, close out permits, and then get it uploaded. The ones from the state will just automatically show up on there.
I meant to say surveyor, I said appraiser doing the elevation certificate. It's the surveyor that does it.
Surveyor.
That's what you need. Yeah, sorry, my bad.
That's
And,
awesome.
Also, I want to say Lisa Foster does a training at the local real estate boards about flood insurance, and I parrot her every time when people say, "Is it in the flood zone?" And I say, "Anywhere it rains is a flood zone." So it's not about that. It's about whether or not a mortgage company would require you to have insurance in order to underwrite your mortgage because they want to mitigate their risk on the property. And the other one last warning is that it really pays to have someone who works at the beach close to the water where they know the answers to these questions, because I have had people purchase in a town and not realize that it was not just like improvement to improvement, that there was a 1 year or a 3 year or a 5 year a limit on improvements that you could make. So it's really important to get someone, and then they were stuck. They bought a house to fix up and then they're stuck. They can't fix it up. So that's it.
Doug, did you get your questions answered?
Yes.
Okay, thank you. I'm gonna go ahead and mute you now.
Oh,
Yeah, sorry. I would like to share a, because you talked about the rates in comparison to the full risk rates and with the elevation certificate subsidized. So I'd like to share my screen on what that actually looks like for real, because it's actually pretty big deal. Okay, so
Hello.
there we go. All right, so what is it sharing it yet?
no,
Share. There
there
we
we
go.
go.
All right, so what I'm sharing is a screenshot of rates over time for subsidized policies. And these are your pre-firm constructed prior to 1974 type policies. And I have a red line here, and this red line is properties that are not the primary residence. So these are your rentals. Those rentals and those properties have been sustaining 25% increases every single year since 2013. Every year, 25% increases have been happening to those rentals. So a elevation certificate is really very highly likely to help that property, because in 2016, even if it was 2 feet below the base flood, it would be more beneficial to use an elevation certificate than to not use the elevation certificate. And right now, those premiums are right up there at $20,000 for those rentals. So that's a really high premium for a single family home, only $250,000 in coverage. So we really do want the elevation certificate, and we want to have it applied. And if it's not beneficial, we will keep comparing every single year that we have your flood policy. So that way we can always make sure to look at and what is the best policy. Your primary residence rates, they're still, they're kind of holding steady, but they're still pretty high. But they are a mandatory 5% increase every single year. So even if they're not going up the massive 25% that the non-primaries are, they are going up. And so we really do still encourage the elevation certificate. And again, there's a lot of changes coming to the NFIP program. and where elevation certificates are going to be a necessary thing. So we really do encourage you to still consider the elevation certificate and look out for that information.
So the point I want to add about
Exactly.
the flood insurance rate increases, I think people hearing that a non-primary residence home is going up 25% each year. That's nothing that's dictated by the insurance industry, by Kim Haar or Ashley. It is all dictated by FEMA and the NFIP. So those rates are rates that your agent has to deal with in managing the NFIP flood insurance program for you, or your policy.
Actually,
Correct?
it's not even up to FEMA. Those
Yeah.
are congressional mandates. So that means
Thank
Congress, the members of Congress that you have and voted into there, and they are the ones that elected to have non-primary residences receive a 25% increase if it is a pre-firm property. So that was elected in 2013, or I'm sorry, 2012 with the Burgett Waters Act. And then it was reaffirmed with the Homeowners Flood Insurance Affordability Act in 2013, and it has been maintained. Congress has been delaying doing any kind of real change to the flood insurance program up until this point because of the election process. So if this is really something that upsets you, please write your congressman. Please let them know that you want to change. You don't like that.
Thank you.
Thank you.
So do we have any more questions from the audience, Sherry?
Right now, no, I do not have any other hands raised.
Okay, thank you. So with that, I think we're going to move into the conclusion of this. So I want all of you to think about this, because I'm going to ask you each if you have one final comment or one final point that you would like to make or leave the audience with, and we'll go in the same in the same order that we presented. So Kim, what else would you like to add, or what do you want to make sure the audience leaves with?
I want to make sure that the audience leaves with just basically understanding how important it is when you live on the beach to have flood insurance. Please, whether it's a primary, a non-primary, it's just important to have flood insurance to protect the property and against any future event like we had this past year. So that's it. Thank you all for joining.
Thank you. And Ashley, I'm going to give you a chance to add something else.
Thank you so much for having me. I feel like I talked a lot for but it's a really passion topic for me. So thank you so much for having me. And again, any questions about flood insurance, we're all always here to help. We really do appreciate you and everything that's going on. And please just make sure you maintain that policy, because it really is helpful. Even if you have a difficult time with your claim, it really does helpful. And people that do have a flood policy do recover faster. And it's just really important.
Interesting.
Okay, Neil, don't run off. Your turn. You have to unmute.
I did.
There you go.
Okay.
Can you hear me now?
Yep.
Yes.
Okay, great. No, I just want to make sure to reiterate that definitely permits are required for any of the stuff that you do. And it's just with the pictures that you have before or after any repairs or anything happens, we make the permitting process so simple, and it's just a matter of a printout of an application, of course, and a printout of the property appraiser's layout of your house that essentially show, when you're in a repair stage, what areas and what rooms. I usually have people identify rooms by numbers and say, all we have to do in this room, this room, this room is this. And if there's nothing on the floors above, then there's nothing on the floors above. And we try to keep it as simple as we can. And we actually waive permit fees. But I just want to make sure that even for your insurance companies and everybody else, that they know that you at least came in and notified us of your dilemma. And it's, of course, would be after our damage assessment inspections that Mike and I and my inspectors would do. But just let's keep a paper trail going so that you guys can always have backup on any insurance claims, anything that you may need in the future. We're not talking about additions to places. We're talking about strictly getting back to where you were.
Thank you,
and,
Neil.
Beforehand, okay?
Thank you.
You're welcome.
Jenny,
I said everything.
thank you very much. Lisa, I knew you would have a comment at some point during this presentation, and I'll leave you one last comment now.
Okay, well, I just want to say that this town is great. The community really came together after this tropical storm, and I hope that everybody on here just really listened to, you know, what everybody had to say. You know, the goal obviously is to help each other get back up on your feet after an event, and the best way to do that is to be prepared in advance for it. And you know, that means from a financial standpoint too, you know, beyond just the evacuation, where will you go, where will you be evacuating, but what about when we do get hit, where are you going to stay, and how are you going to recover? Because it's everybody's responsibility to recover. And you know, we saw with this storm that, you know, that disaster assistance is not there. And quite frankly, disaster assistance is usually a pretty limited amount of money, and most often is a low interest loan. So it's not going to rain free money from the federal government when we have a disaster. So you really need to make sure you have your ducks in a row, you have your plan in place, you know, you have your insurance policy if you're not self-insured, as Commissioner Blackburn stated. So if you have any questions about this, our emergency management department is happy to help you with the planning process. Our website has a slew of information as well. And you obviously have great resources right there in town. So
You guys are all the best.
Thank you for
Thank you.
Thank you for the invite.
So let me finish up here with a couple of things. Lisa mentioned it. Yep, our website does have a lot of information and links to the county is emergency management and floodplain management. So there's really great information there. There are brochures in the lobby of Town Hall. Stop by and get those. A couple of things I'd like to mention yet. On May the 11th, 6:30, we'll notify folks of this. That is our annual hurricane preparedness workshop. Hurricane season starts June 1st. And we want to be prepared for that. Lastly, all the work that we do to make sure that the town is safe, to make sure that you have a reduction on your flooding insurance rate based upon our community rating system involvement, that comes through our committee called the Flood Risk Mitigation Public Information Committee. We're looking for members of that. So we're looking for residents that want to get involved, want us to help us work on those programs, make sure that we get the messaging out to residents about insurance, about preparedness in case of a hurricane, all of that. So we need your help. We need your involvement. And with that, we'll end it tonight. Thank you all very much for your attendance. Thanks to all the panelists for the great information that you provided as well. Good evening.
Good evening.
Thank you. Thank you. Good night.